My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make you a little money. My job, not just to entertain, but to educate, teach you. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. Half full versus half empty. You can apply that lens to everything in this market these days, with the Dow shed 97 points, while the S&P inched up 0.17%, and the Nasdaq gained 0.37%. You literally could see the whole tug of war play out today in the action of one stock, Apple, after word leaked out to Bloomberg that it canceled its 10-year project to develop an electric car. The stock had been trending down, off about a half a point, when the news broke instantly. First, Apple plummeted another $0.50. I mean, it was incredible, which is a lot for this lumbering big cap stock. A real statement from the glass half empty crowd. But then, boom, it was off to the races. The stock pirouetting and then soaring higher, punching through a key level of support, 179.56, all the way up to $182.63. A stunning reversal. Glass half full contingent wanted in. Why? I think it's because it dawned on these optimistic realists that Apple's embracing efficiency, where projects that are going nowhere get shuttered, especially now that they need to invest in generative AI. I know I'd rather invest in AI than EV any day of the week. And a year of efficiency invokes Mark Zuckerberg's view before a monster run for Meta, even as I believe that Apple would find that particular comparison odious. The market for electric cars has paused, or worse, as we don't have cars that can be charged as quickly as we can fill up a proverbial gas tank. And we have range anxiety. Without that charging infrastructure, Apple could be making a product without a market, especially one that is a high-priced car without a market. Now, I want to contrast that with Vision Pro, which I know is expensive, but bear with me for a second. I think that's going to have a larger market as more people develop software for it. The thing's a winner, and not just from the early adopter set. Go try it on. I love it. Or take the brand-new Apple Sports app, sleek, fast, cool, quick updates, ongoing odds, tote board-like. The more programming they can put on that site and not slow it down, the more you'll want to download it and maybe ultimately pay for it. Right now it's free. That app could be the gateway to sports for, let's say, for a device that really doesn't have enough sports. How about that? Let's not complicate things. And it's certainly more important than an electric car. Now, I'm not against electric cars, and I think we need to be sure that we're going in that direction ultimately. But if you're Apple, you got better uses for that money right now. While I think of the big burst higher that have happened in this market, or particularly in the Magnificent Seven, I go back to Amazon, which figured out how to do more with less to get you the package cheaper and quicker. But hey, it's a lot of same day these days, don't you think? I think about Meta. Yes, glorious Meta. With its gigantic layoffs in recognition that you need to give yourself a return on investment for everything. Sure, Mark Zuckerberg's still out there trying to make the metaverse into something, but he's making progress as Meta's Ray-Ban smart glasses are selling out. Everything is firing on all cylinders there, with fewer people, the right fewer people. As for Apple, we have no idea what other big things it's working on, so it's hard to say what's sufficient for them. But I think they're smart to shift that money from EVs to AI. AI can help make your cell phones autocorrect a lot less irritating. Artificial intelligence has synergy with everything else they make, whereas electric car would be its own separate thing in a market where they have zero exposure. I can do without that, speaking of efficiency. What we really want to see, you and I know where I'm going on this too, is some sort of order at Google. You know what? I don't even want to call it Alphabet anymore because, heck, they never change the symbol and no one else does. I'm the only guy I think who calls it out. I bet you they don't call it Alphabet. Here's something to ponder. How many divisions, how many outposts, how many warrens are buried in the sprawling Google intellectual playground? First, let me bet. You've been fooling around with your Fitbit Charge 6 tracker, haven't you, for $159.95. Is this tracker, is this the one you want Google wasting its time on? Give me a Garmin. Truly a great use of brain power, isn't it? What a crackerjack acquisition. It's a needle bender. Let me just check on my phone to see if I can find out exactly on my watch. Oh, there it is. Fitness audio workout. Oh, no, those belong to Apple. I'm sorry. Or how about this? Google had at one time 2 different competitive health initiatives going on. Not kidding. They started one in 2018 that was run by David Feinberg, who's actually a true healthcare genius, who then moved on to Cerner when Google dissolved his division. Why not? They already had a business called Verily devoted to health and life sciences. Two different divisions for health and life sciences at one company? I mean, what is that, novel? It's Survivor. It's Google. Survivor and Google Island. Make Jeff Probst CEO. He ain't got nothing for the losing divisions. Hey, speaking of losing divisions, how's that Waymo doing? Is Google's self-driving car better than GM's that I took a nice ride in before it shut it down? Well, I know it's back. Big deal. Look, I believe self-driving cars are the way of the future. I think everything's the way of the future. It's easy to say that than to say it isn't. I'm no Luddite. I think electric cars are the way of the future, but they're not the way of the present. And while it'd be a shame to see Waymo have a fiasco like GM's Cruise had, it shows us that there are real safety issues that haven't been resolved for driverless cars and not just black ice. How much money has been spent on Waymo? How much more will be spent? The lousy performance of Google is indeed the talk of the town. We know its price-earnings multiple is just it's a laugher. It's the lowest of the Magnificent Seven. For a reason, it might be the worst one. We know that its efforts in artificial intelligence have been, let's just say, episodic, but Google's biggest fiasco was taking over the NFL Sunday ticket package, burying it in YouTube TV, and then doing absolutely nothing with it to monetize the darn thing as it could have been. They went as far as running cat pictures in the fourth quarter commercials when all of us were doing daily fantasy. I'm not kidding. We're all doing daily fantasy or playing fantasy, and they're running pictures of cats. Cats! And I like cats. I was once Purina Cat Chow spokesman for about 30 seconds. We had some of the most valuable advertising real estate in the world, fourth quarter, where every fantasy player's waiting with bated breath, and they run pictures of kittens. Google bought this property, and they provided no analytics, no gambling ads, no creative daily fantasy, nothing. And now they don't even know how they did on it. They took one of the greatest franchises in the world, just threw it out there with nothing. No fanfare, no cool stuff like they gave you on Amazon. Amazon's got some really cool web services stuff. No adjacent programming. They bought it and they deep sixed it as if it were doomed to fail instead of embracing it and promoting it. Heaven forbid they gave us the breakdown of how it's really doing, profit and loss. But that's not their style either. Who is this Google that made it so that we now use Copilot instead of Google search all the time? Who is this Google with so many divisions and so many money losers that you feel like you're investing in some sort of black box with a license to lose money, 000? I mean, there has to be some point where management pushes through a year of efficiency and we finally find out how many different divisions, how many layers they have that aren't producing anything, and how many valuable franchises they have, like the NFL Sunday ticket, that are just lying fallow. Here's the unvarnished truth about Google that no one ever wants to say because they're afraid. Its stock would be dramatically higher if it would just do what Apple did today, according to Bloomberg. They justify everything there by saying it is justified. I'm not kidding. It's justified because, well, it's justified at Google. You know what that's called? That's called circular reasoning. I've been a backer of Google from the day it came public. It's all on the record. You can see the day it came public, I said it was worth double, triple. I mean, I knew. However, this weekend at the CNBC Investing Club conference, I broke the taboo and said, you know what? I have no idea who they are anymore. Alphabet, Google, Cloud Services, changes its name without telling anyone. Drones, the balloons. Remember them? The Fitbit, the advertising business that's not as good as Trade Desk, and now, heaven forbid, Pubmatic. Plus a self-driving business that may never see the light of day. Not to mention a search business that's increasingly undersold from generative AI, and a bunch of lawsuits, too. A lot of lawsuits. They're really good. They don't wear suits, but they got lawsuits. The real problem is that the people running Google don't seem to know who they are either. They don't need a year of living efficiency. They need a year of living dangerously. Dangerously for the thousands upon thousands of employees and myriad projects that might just be described as dead wood in another era. Here's the bottom line. It's time for Google, Alphabet, whatever, I don't even care, to stop running as a skunk works for all sorts of ideas that may or may not work and start focusing on actually making some money. Otherwise, let's just say I smell a skunk. Daniel, New Jersey. Daniel.
Hey, Jim, it's an honor. I've been following you and listening to you for 19 years. You're the only person at Wall Street teaching the small guys, so truly an honor and appreciate you.
Oh, thank you, Daniel. Sometimes I get hard on companies, but yeah, we're trying to help people make money. I'm trying to teach. I like it. I'm looking at Regina Gilgan. She was at my conference this weekend for the investing conference. We're trying to teach. That's what we're doing. I mean, when you said 19 years, that's what made me think of Regina, because that's how long we've been together. How can I help you?
Yes, sir. So I have an energy play. Market cap is phenomenal at $49 billion. PE ratio at 13.47. Makes money, like you say, $1.09 per share. Operates natural gas pipeline storage and transportation. I'm wondering if this is a good investment or if you would recommend something else. It's ET, Energy Transfer.
Oh, I like ET a lot. I like Enterprise too, but I like ET a lot. And I think that, you know what, Kelsey Warren, I was critical because I didn't like some of the deals that he made. Everything worked out, and he is welcome anytime on the show. Kelsey, I was tough. I've relented, and I've liked your stock for a while. It's time to come back. All right, look, it's time for Alphabet. Where's the Alphabet soup, the Campbell soup? Do we have that? Oh, that's another stock that's kind of flatlining. But listen to me. Alphabet's got to stop running as the skunk works for all sorts of ideas and just focusing on making money, or I'm voting them off Alphabet Island. On Mad Money tonight, Zoom has been in a tough spot ever since it became a market darling in 2020. And after reporting a strong quarter last night, is this the turn we've been waiting for? Hey, what do you check? Let's check in with the CFO. Then, could one Magnificent Seven name be responsible for dragging down the averages? I'm going off the charts to see what the technicals are saying about the future. And then let's remember, hims and hers. Whoa. It's escaped the doghouse with a strong quarter. I'm learning more about the story with the CEO. And I got to tell you, this one is one for the book, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.